So welcome again to this session. After having completed 1.7, we move over to 1.8. Over here, it is written that Highline Enterprises is having their head office at City X and branch at City Y, and head office invoices goods to branch at cost plus 33 1 by 3%. Actually, it is percent. 33 1 by 3%. Is it clear to you? So once again, without any doubt, actually rate is given on cost. So we will have to presume cost as 100. And how we are going to compute the rate in this particular case, I will let you know in a short while. Now, as far as information is concerned in this particular question, what we come across that stock is at invoice price. I need not require to tell you, you are going to put it on the debit side, and of course the loading will be put on the credit side. Goods sent to branch at invoice price is given. First of all, you are going to put it on the debit side of the branch account, and of course you will have to pluck out the loaded portion on the opposite side. And even in case of goods return, first of all, you are going to put it on the credit side, then loading on the debit side, then cash sales under remittances, credit sales you will write under debtors, discount allowances to customer will be put on the credit side of the debtors account, and closing stock is also given to you at 60,000. And this time it is given that it is estimated that 2% of the goods received are lost through the natural wastage. Now this line you will have to ignore. If ever under data system you are given abnormal loss or normal loss, of course this is a case of normal loss because it is clearly written that it is estimated that 2% of the goods are lost through the natural wastage. Natural wastage means the nature of the goods is such that howsoever foolproof packing we may do, still actually this loss will occur. So it is natural. So if ever you are given abnormal loss of goods or normal loss of goods, you are going to ignore it down. The reason being is that because we write in the branch account closing stock. And when we write closing stock, it means the closing stock is after taking into account the abnormal loss or normal loss. So whatever closing stock is left over, we are going to put on the credit side as we do, as you know. So indirectly, when we write closing stock over here, that means abnormal loss and normal loss is already adjusted. So that is why if in the question of debtors ever you get abnormal loss of goods or normal loss of goods, you will have to simply ignore it out. Is it clear to you why we have to ignore it out? Because we write closing stock on the credit side, and when we are writing closing stock on the credit side, it means it is already adjusted. So now in this particular question, the first thing which I need to do is to find out the rates, correct? Now, in this question, I have seen actually some people have confusion while computing rates when these are given in this fashion. So rates analysis, this should be your first task, rates analysis. And when you are going to do the analysis of the rates, the first thing which we need to do is to write the cost price, and obviously after that we write margin, and after writing the margin, we write here invoice price. Is it clear to you? Invoice price. Of course, in this particular question, rate is based upon cost. One need not require any mental exercise in it. Rate of profit is on cost. And it is stated in the question that goods are being sent at 33 1 by 3%. So if I am going to compute 33 1 by 3%, my margin will be 33 1 by 3. 33 1 by 3. And my invoice price will become 133 1 by 3. Now, I will have to write in the numerator margin, and the margin is 33 1 by 3 as I told you, and in the denominator I will have to write 133 1 by 3. Now only thing is that I have seen some people actually have little bit of what we call confusion how to solve it. Now as far as numerator is concerned, in order to solve it, first you multiply 33 with 3. So 33 into 3 will become 99. Then you add 1. So 99 plus 1 will be 100, and 100 by 3. So that means this numerator, the figure which is written in the numerator will be equal to 100 by 3. How I have derived this figure? 33 into 3, that is 99 plus 1, 100 by 3. And similarly, below which is given 133 1 by 3, first of all I will multiply 133 with 3, that will give me 399, then plus 1 400, so this figure will become 400 by 3. Is it clear to you or not? So this is how we will have to solve it out. So once we have solved it, now the next point is 100 by 3, and now you will write it 3 by 400. 3 by 400. So 3 cancel. Ultimately, we may say rate of loading on invoice price this time is 1 by 4. Your rate of loading on invoice price will be 1 by 4. Is it clear to you or not? This is how you are going to compute the rate in this particular question. So once you have computed the rates, now you are in a position to find out, you are in a position to prepare your branch account. So you will write here branch account, and after writing the branch account, and then we will write here debtors account. This is our branch account, and then I am going to write here debtors, branch debtors account, branch debtors account. Clear? This is how I am going to prepare. Let me keep the sheet of the question. This is 1.8, I think so. Yes, it is. So we have already computed the rate, so I will pick up the information. The first information is your opening stock. So as far as opening stock is concerned, first of all, we will write here balance brought down. Under the balance brought down, I will write here opening stock. Amount of opening stock is 40,000. Because this is opening stock, correct, I will have to pull out the loaded part. So on the opposite side, I will be writing here load on opening stock. Instead, I can also write, as I told you earlier, I can also write stock reserve. Correct? Anyway, 40,000, and rate of loading we just computed is equal to 1 by 4. So our loading will be equal to 10,000. Loading amount will be equal to 10,000. Then in this question, it is given that goods are being sent to branch at invoice price of 2,50,000. So goods sent to branch account. Goods sent to branch account, I will be writing here at invoice price of 2,50,000. So I will be writing here 2,50,000. 2,50,000. And then on the opposite side, I will write the loading, goods sent to branch account. Now goods sent to branch account, 2,50,000. Load on goods sent to branch account, 2,50,000 into 1 by 4 will be equal to 62,500. This is how you are going to incorporate it. Then we are being given goods return. So on the opposite side, first of all, I will write goods sent to branch account, returns, and 10,000 worth of goods have been returned to us. So I will write over here loading on goods sent to branch returns, goods sent to branch returns, and loading will be 10,000 into 1 by 4. That is equal to 2,500. The next item we are being given here actually is cash sales. So I will be writing over here remittances. Under the remittances, I will write cash sales. An amount of cash sales in this particular case, cash sales is actually 1 lakh. Cash sales given to us is 1 lakh, right? So cash sales is 1 lakh. So I will be writing here 1 lakh. In this particular question, now we are being given credit sales. Credit sales are worth rupees 3 lakhs, and in this question, opening balance of debtors so far is not given. Opening balance of debtors is not given, but credit sales are given. Credit sales is equal to 3 lakhs. Credit sales is equal to 3 lakhs. And then discount allowances to customers. So we have given some discount allowances to customers. Discount allowances to customer will be put on the credit side of the debtors account. So I will write here 10,000. And then we are being given here closing stock. So we'll move into the opposite side of the branch account, wherein we are going to write balance carried down. Over here, we are going to write closing stock, and the amount of closing stock happens to be 60,000. And then I will write here load on closing stock, that is 60,000 into 1 by 4, that is equal to 15,000. Now, in this particular question, opening balance is not given. At the same time, closing balance is not given. And balancing figure is coming over here as 2,90,000. So point here is that you should not consider 2,90,000 as the closing balance. You will presume closing balance as nil, and instead you will presume this figure as cash receipt from debtors. Reason being is that, first of all, let me write here cash from debtors. Reason being is that you have sold some goods on credit. You have sold some goods on credit, number one, and you have given some discount. And generally discount is given only when the people will pay or the customer will pay before the stipulated date of payment. So that is the reason actually we need to presume this about 2,90,000 balancing figure as cash receipt from debtors. Is it clear to you or not? So cash receipt from debtors will be put over here. Cash receipt from debtors. Cash from debtors. So cash from debtors, in this case, you are going to write here 2,90,000. 2,90,000 will be the amount of debtors. Is it clear to you or not? Now the next point is that now you are going to tally it out to find out your net profit, and your net profit will become 2,25,000. 2,25,000 will be your net profit. 2,25,000. But you must make a check. Is it clear to you? So well, after having completed this particular question, now we will move over to the next one. Quite obviously, this part is pretty strong and important one. So next question is, actually this question is very simple one, to be very honest with you. 1.9. This question is struck once in the past examination. At the time it carried actually 2 marks only. Spectrum Limited has a branch at city K, and you are required to calculate the invoice price of the goods sent to branch account and profit included thereon from the following details. The question is asking you a very simple question. Question is asking you, compute the amount of goods which head office has sent, and question is telling that also compute the amount of profit included therein. Indirectly it means question is asking you the amount of what we call loading which is included in the goods sent to branch account, and below it is written that goods are invoiced to the branch at cost plus 25%. Here it is written goods received from head office 1 lakh and goods in transit is equal to 1,50,000. So in order to solve this particular question, first of all you will have to write here cost price plus margin. Cost price plus margin is equal to invoice price. Is equal to invoice price. It is very clear in this particular case that the rate is based upon the cost, so we shall presume cost as the 100 and the margin will become 25, and need not require to tell you that your invoice price will be equal to 125. Rate of loading on invoice price will be 1/5. Is it clear to you or not? So your rate of loading you have computed. Now second important point is that in this case, it is stated that head office, actually question is asking you to find out the amount of goods sent to branch account. And question has given you that goods received from head office. Goods received from head office is given. That means branch has received goods worth rupees 1 lakh. 1 lakh worth of goods have already been received by the branch, and it is also stated in the question that goods in transit is equal to 50,000. If branch has received 1 lakh worth of goods and 50,000 are still in transit, quite obviously head office must have had sent 1,50,000 worth of goods. Head office must have had sent 1,50,000 worth of goods, and 50,000 are still in transit. That is why branch has received actually 1 lakh worth of goods. So we may say, in order to give answer to this particular question, because question is simply asking us compute the amount of goods sent to branch, so you will solve it this way. Goods sent to branch will be equal to this much. Received, that is equal to 1 lakh. Amount of goods received is equal to 1 lakh. And then you are going to simply add goods in transit, and goods in transit will be equal to 50,000. So goods sent to branch will be equal to 1,50,000. And what is the loading included in it? The amount of loading also you can compute, because question is simply asking you the amount of loading which is included in goods sent to branch account. So the loading amount will be equal to 1/5 of 1,50,000. That is 1,50,000 into 1/5, 30,000. It is a 2-mark question, to be very honest with you. This question has once struck in the examination, 30,000 will be your loading. Correct? Now 1.10, let's have a look what's given in this particular question. From the following details given below relating to Nainital branch for the year ended 31st of March 2028, prepare Nainital branch account in the books of the head office. Now this time, you are being given that goods are sent at a profit margin of 20% on selling price. This time it is given that goods are being sent at 20% margin on selling price. Indirectly, it means 20% on invoice price, because I have already told you on umpteenth occasion now that selling price and invoice price is one and same thing, isn't it? So this time, your rate of loading is based upon invoice price. So you will presume invoice price as 100 and your margin will be 20 and your cost will be 80. And ultimately, your rate of loading on invoice price will be 20 by 100, that is 1 by 5, correct? However, rest of the question goes like this. Your opening stock is given. Obviously, even though invoice price is not written, you will presume it at invoice price 5,000. Then opening debtors are given. Then we have been given furniture, then petty cash. Correct? All these items will be written as opening balances. In this particular question, insurance prepaid is also given. Insurance prepaid is also an asset. So you will write balance brought down, all these items, and this is the first question wherein we are getting what we call opening balance of a liability. Now opening balance of liability will be put on the credit side of the branch account. Salary due, that is equal to 1,000. Now goods sent to branch, obviously it is at invoice price. I have already told you whether invoice price is written or not. You will have to presume it that this is at invoice price. Is it clear to you or not? Now cash sales are given to us, so cash sales we shall write. Then total sales are given to us. Now total sales are 70, cash sales are 55. Obviously our credit sales must be 15,000. Cash receipt from debtors are also given 16,000. Then goods returned by branch are given to us as 500. Goods returned, time and again I have told you, actually it's a transaction between what we call branch and branch debtors, so it will come only in what we call debtors account. It is goods returned by debtors is actually this item, that is 200, not 500, and goods returned by branch is actually 500. It will come in the branch account and loading will also be done. Then in this case, head office has sent some cash, and cash has been sent for the purpose of meeting the rental expenses, salaries, and some more petty cash has been sent. There is already opening balance of petty cash and some more petty cash has been sent. And we have sent some cash to meet insurance expenses, 400. However, in this particular case, it is written that insurance expense have been paid by the branch up to June 2028. Remember, your accounting year is ending on 31st of 3, 2028. Your accounting year is ending on 31st of 3, 2028. And it is stated in the question that these expenses cover a period up to June 28. What I want to say, actually your current accounting period is starting on 1/4/2027 and it will end on 31st of 3, 2028. So we have to do the accounting till up to this particular date. However, insurance expenses have been paid up to June 28. Up to June 28. That means our accounting year will come to an end on March. So April, May and June. That means 3 months period of next year is covered by these expenses. So we may say that out of 400, 3 months insurance is prepaid. So your closing balance of prepaid insurance will be equal to 100. Is it clear to you? Out of 400, 100 will be considered as prepaid insurance expenses because these are prepaid for the next year. That means these are prepaid, closing prepaid, that is at the end of the year. Is it clear to you? Then also it is given in the question that petty expenses incurred by the branch is equal to 500. And then we are being given actually closing stock and depreciation on furniture 20% is also given. So this is the question, although you can manage this question of your own, but still for your sake, I will be doing this particular question. Now, in this particular question, this question is 1.10. So I will pick it over here, 1.10. Now, in this particular question, first of all, I will compute the rates analysis. In order to do the rates analysis, the first thing which we need to do is to simply write the cost price, margin, and invoice price. Then we have to look into the question to find out whether the rate is based upon cost or invoice price. In this question, it is given that goods are being sent at a margin of 20% on selling price. Remember one thing, your selling price and invoice price are one and same thing. So you will consider your selling price or invoice price as 100 because rate is based upon it. Is it clear to you? Then 20 will be your margin and cost will be your 80. Now you write margin in the numerator, in the denominator you put your invoice price to get actually 1/5 as your invoice price. Is it clear to you or not? Once you are done up with this particular step, now the next one obviously will be to prepare your branch account and obviously then debtors account too. Branch account. First of all, you will be writing. It's a pretty long question, so I will prepare a bit longer branch account. This is how I am going to prepare it. This is my branch account, correct? After that, I will be preparing branch debtors account. So this is my branch debtors account. Now, in this particular question, first of all, there are lots of opening balances. So I will be writing here 2 balances brought down. So balances brought down, first of all, opening stock is given to us. So I will be writing here opening stock. Opening stock is 5,000, but we must not forget to pull out the loading part. So loading, I will be writing over here, load on. Load on. Opening stock. Now opening stock 5,000 is there and rate of loading we have just computed, that is 20/100 or 1/5, that is equal to 1,000. Then we are being given debtors, so I will be writing here debtors. Amount of debtors which is given to us is 2,000, so I will be writing here 2,000. And because we are preparing debtors account, so in the debtors account I will be writing here balance brought down, that is equal to 2,000. Then the next one is furniture. So in this particular question, we are being given balance of furniture. In short form, I have written F/F. So furniture amount is actually 1,000, and besides that, we are also being given petty cash. Petty cash is 200, and then insurance prepaid. Insurance prepaid. Insurance prepaid. Opening balance of insurance prepaid is 50. And then in this question, salaries dues are given. So on the opposite side, I will be writing here balance brought down. And I will write here salaries due. Now salaries due in this particular case is 1,000 rupees. So I will be writing here 1,000. Salaries due. And then I will write here remittances. After this, we are being given goods sent to branch. So on the debit side, we shall write here goods sent to branch, and goods sent to branch given to us is 40,000. So I will be writing here 40,000. On the opposite side, load on goods sent to branch, that is 40,000 into 1/5, that is equal to 8,000. So this is how you are supposed to do this particular question. Then we are being given cash sales. Cash sales is equal to 55,000. Under remittances, you will write here by cash sales. And the amount of cash sales, as you can see, is 55,000. And the next item is your total sales. And total sales given to you is 70,000. Obviously, it means your credit sales is equal to 15. And credit sales will figure on the debit side of the debtors account. Then we have got cash receipt from debtors. Cash receipt from debtor, first of all, I will write here on the credit side of the debtors account, and this happens to be 16,000. And then it is also written under remittances. So under remittances, I will write here cash from debtors. Cash from debtors. Now cash from debtors happens to be 16, so I will be writing here 16,000. Now the next item is goods returned by branch. When branch will return the goods to the head office, we will put it on the credit side by goods sent to branch account returns, and the amount happens to be 500, and its loading will also be done. So it's loading. You will write over here load on. In fact, I will write here load on goods sent to branch returns. Goods sent to branch returns, that is 500 into 1 by 5, that is equal to 100. Clear? After that, we are being given goods returned by debtors. So when debtors return goods, it is known as sales return or return inwards, and no loading is incorporated. I have already told you, because it is a transaction between branch and branch debtor. Then we are being given cash sent for branch expenses. So cash sent for branch expenses now given to us. So we will be writing here to cash, and cash has been sent to meet expenses related to rent, that is equal to 3,600, and then to meet salaries, amount of salaries is 10,200, and then for insurance also 400 rupees are being sent by head office. However, insurance expense paid by branch is covering a period of June 28. That means some portion, some months, 3 months of June of the next year, you can say so. And then some petty cash is also being sent. That is equal to 600. After this, it is written petty expenses incurred by the branch. So when I will write here closing balances, balance carried down, over here I will be writing petty cash. Now we know that branch initially is having petty expense of rupees 200 opening balance, and head office has sent 600 rupees. So all in all, branch is having total petty cash of 800, and out of 800 it is given that 500 has been spent. So we may say now that closing balance happens to be 300. Then we are being given closing stock. Now closing stock is actually 3,000, so I will be writing here 3,000, and its loading will be done, loading on closing stock. Closing stock is 3,000, and into 1 by 5 I will write over here, that will be equal to 600. And last item is depreciate furniture by 20%. We know that furniture which is given to us actually is 1,000, and 1,000 is the amount of furniture. 20% depreciation will be 200. So closing balance will be 800. I've already told you we never show depreciation directly, because we are not preparing branch account. We cannot write here depreciation directly. So in order to incorporate expense of depreciation in this particular account, we have to put opening balance of furniture on the debit and closing balance on the credit, and the difference will be equal to your depreciation. Now in this question, closing balance of debtors is not given. So closing balance of debtors, first of all, you are going to compute. In this particular case, closing balance will be 800. Now this closing balance will be written over here, as you know, 800. So 800 will be your closing balance of the debtors. And finally, now you will be in a position to find out your net profit. Your net profit will be 22,750, right? It is 22,750. So this is how you are going to do this particular question. Is it clear to you or not? So pretty strong questions and strong topic, but however, once you will develop the efficiency, now I hope that you have developed the complete efficiency, isn't it or not? Now you have developed the complete efficiency in it, so it should not pose much difficulty to you. Now the next question is very strong question, invoicing past examination question, 4 marks, and here it is written, from the following information of Jammu branch of Best Limited, New Delhi. Now head office is in New Delhi, and it is having a branch in Jammu, and for the year ended 31st/3/2028, some information is given. First of all, it is given goods to the branch at cost plus 20%. It is given in the question that goods are invoiced to the branch at cost plus 20%. Goods are invoiced to the branch at cost plus 20%. What does it mean? Goods are invoiced to the branch at cost plus 20%. If your cost price is 100, then you are invoicing the goods to the branch by adding 20% to it, because it is clearly written in the question that goods are invoiced to the branch at this particular price, this will become your invoice price. Isn't it or not? Now, questions prior to this one, and moreover, when I started actually this particular topic, invoicing, I mentioned time and again, and on umpteenth occasion, I did mention that unless otherwise stated, always presume that invoice price is equal to selling price. Unless. In this particular question, what we find that selling price is cost plus 50%. Now, in this particular question, it is clearly given that selling price is different. So, in this question, we cannot say that invoice price and selling price are one and same. So, selling price is cost plus 50%. Cost plus 50%. If cost is 100, then your selling price will be cost plus 50%. I will add 50%. And my selling price will be equal to 150. My selling price will be equal to 150. Is it clear to you or not? So this is the first question actually where we are getting three different prices. One is cost price, as you have already seen. Another one is invoice price, and this one is selling price. So in this question, we may say that selling price and invoice price is not same, simply because of the fact that this particular question has absolutely given in a crystal clear manner that selling price is different than the what we call invoice price. Isn't it or not? Now further in this particular question, you are being given opening stock. Now nothing is written. In case of invoicing question or in case of question which are based upon rates, you may say that even though if nothing is mentioned, we'll presume that opening stock, correct other information, opening stock is at invoice price. Now goods sent to branch, again it will be considered at an invoice price. And sales is given in this particular question. However, you must not forget that this time branch is selling the goods at cost plus what we call 50%. Correct? So that means sales obviously will be at selling price, and selling price is 150. And expenses incurred is 45,000. Now question is asking profit earned by the branch during the year. And of course question is also asking branch stock reserve in respect of unrealized profit. What we mean by that, unrealized profit simply means the closing stock. Correct? Because the stock which remains and the loading thereon remains unrealized, it is also known as unrealized profit. Anyway, so this is the question. So in this particular question, the first thing which you need to do is how to do the rates analysis. This is another important aspect. We know that in this particular question, cost price, we know in this particular question that cost price is 100. We also know in this particular question that invoice price is 120. Invoice price is 120. However, in this particular question, there is yet another price, that is selling price, and selling price is 150. Selling price is 150 in this particular question. Isn't it or not? Now, if you are going to take the difference of these two, cost price and invoice price, we get the difference of 20. The difference between cost price and invoice price is margin, and margin basically means difference. So, invoice price is higher than cost price by 20, so 20 is our margin, and if I am going to divide it by 120, I am going to get 16. So 16 will become your rate of loading on invoice price. When we apply this rate on an item of invoice price, as we know, as we have been doing earlier also, so that item will come down to cost price, correct? Similarly, now in this particular case, there is another what we call situation. There is a difference between invoice price and selling price. And remember one thing, the difference between invoice price and selling price is 30. If I am going to divide 30 by 150, it will also become rate of loading. See, in the denominator here I have written 120, so this is your what we call rate of loading on invoice price. And here I have written in the denominator selling price, this is rate of loading on selling price. 30 by 150 or 1 by 5. This is rate of loading on selling price. What does it mean? It means if I am going to apply this rate on selling price, if I am going to apply this rate on an item which is at selling price, that item will fall down to invoice price. For example, when we apply this rate 1 by 6 on an item which is at invoice price, indirectly that item falls down to cost price. So similarly, when you are going to apply this rate on an item which is at selling price, then that particular item will fall down to what we call invoice price. Is it clear to you? Now, under this case, there could be another situation, another tricky situation. What is that tricky situation? There is another rate in this particular question. For example, if you will take the difference between the cost price and the selling price, if you are going to take the difference between the cost price and the selling price, the difference between cost price and selling price is 50. And if I divide 50 by 150, again this is rate of loading on selling price. This is rate of loading on selling price. However, if you are going to apply this rate on an item which is at selling price, that item will fall down to cost price, because this item or this rate takes into account the difference between the cost price and selling price. In the denominator, we have written what we call selling price. Again, this is rate of loading on selling price, but this rate will be used only to convert selling price into cost price in case if we need. Is it clear to you or not? So in this particular question, when we will go through this particular question, see here, we are being given opening stock. As I told you, opening stock is given, goods sent to branch is given, and sales is given, and expenses is given. First of all, in this particular question, neither opening balance of debtor nor closing balance of debtors are given, and nor credit sales specifically given. So if the question is silent with respect to opening debtors, closing debtors, and credit sales, always presume that this branch is not doing any credit transaction. So you need not require to prepare debtors account in this particular case. In this particular question, however, you must have noticed, actually, we are being given opening stock, but there is no closing stock in the question, and indirectly later on question is also asking you to find out branch stock reserve. I told you earlier, stock reserve is a term which is used for loading in the context of opening stock or closing stock. So question is asking us to compute branch stock reserve, means loading, in respect of unrealized profit. In respect of unrealized profit means loading in connection with closing stock. And closing stock is not given in the question, so I will have to find out the closing stock in this particular case. Is it clear to you or not? So this is the scenario of this particular question. Now, in order to do this particular question, what you are supposed to do, in the books of head office, obviously I will have to prepare the branch account, so I will be writing here branch account. I will write here branch account. Is it clear to you? I think this much is enough, because very few information is given, and I have already told you in this particular question we need to require to prepare debtors account. Now let me pick up the sheet of this particular question. Which is the question? This is 1.11, isn't it? Right. So 1.11. So 1.11 is the question now which we are picking up. I have already talked about the rates. Now first information is given as opening stock. Nothing is written. Always presume it at invoice price. I have told you so often now. So first of all, I will be writing here opening stock. Now opening stock 2,20,000 is given to us. 2,20,000. Now this is at invoice price. On the opposite side, I can directly write loading on opening stock, or I can write stock reserve also. For example, instead of writing loading, I can write stock reserve also. This way also you can write stock reserve, but you must write in bracket opening, because the term stock reserve is generally used to pull out the loaded portion of opening stock and closing stock. When I am writing stock reserve, it means I am suggesting to the examiner that this is loading with respect to opening stock. So 2,20,000 is the invoice price, and basic purpose is to bring it to cost price. I've already told you, in order to bring the item which is at invoice price at cost price, we need this rate 1 by 6. So I will be multiplying it by 1 by 6, and if I am going to multiply it by 1 by 6, I will get some figure. I think this is a pretty clumsy figure. 2,20,000 divided by 6. It is coming in points 36,667. So you write here 36,667 approximately. Is it clear to you? Now, next item is goods sent to branch. So I will be writing here goods sent to branch account. As far as goods sent to branch is concerned, goods sent to branch, and goods sent to branch is given to us as 11 lakh. So I will be writing here 11 lakh. And then on the opposite side, for opening and closing stock, you can write a stock reserve. But if you want to pull out the loaded portion of the other transaction, then you will have to retain the same term. For example, if I want to write loaded portion, I will write here in this manner, goods sent to branch, goods sent to branch. Now I will write here loading. Is it clear to you or not? I will simply write it in this manner, that is 11 lakh into 1 by 6. 11 lakh into 1 by 6. Once again, these figures are pretty clumsy one. 11 lakh divided by 6. It comes to 1,83,333. So 1,83,333. This will be the loading of goods sent to branch account. Now, next item which is given to you is sales in this particular question. Generally, we write here remittances, and under the remittances, we write cash sales. And in this case, all these sales must be on cash basis, because I've already told you there are no credit transactions in this case. So, you will write here cash sales. An amount of cash sales is 12 lakh. And in this question, no question of cash receipt from debtors will arise. Are you getting my point or not? In this question, we cannot have cash from debtors because there are no credit transactions in this case. So your remittances amount will be equal to 12 lakh. Expenses incurred by branch. And we know that whatever expenses are incurred by branch, head office will send the cash for the same. And then only it is possible that branch will incur the expense. So indirectly it means cash sent by head office to branch for expenses. So to cash, that is 45,000. This is the scenario of this particular question. So most important part in this particular question is you will have to find out the closing stock. So you will have to find out the closing stock. Is it clear to you or not? And how to find out the closing stock? This is the important point. In order to find out the closing stock, first of all, you need to understand that opening stock which is available with the branch, opening stock which is available with the branch at invoice price is 2,20,000. All these items are at invoice price. Remember one thing, correct? Opening stock at invoice price available with the branch is 2,20,000. And in the current year, head office has sent goods sent to branch at invoice price. So 11 lakh worth of goods at an invoice price of 11 lakh, you can say. We have sent some goods to branch in the current year. So that means total available goods at invoice price is equal to 13,20,000. This is your goods available at invoice price. Goods available at invoice price. Total goods available at invoice price is 13,20,000 with the branch. So branch has 13,20,000 worth of goods at its disposal. Now we are being given that sales by the branch, in fact, let me write here, less invoice price, less invoice price of goods sold. What we mean by invoice price of goods sold? Branch is having 13,20,000 worth of goods at invoice price to sell. and branch has sold out some goods, no doubt about that. I just want to know what was their invoice price. And once I will be able to find that price, then I will be able to find out closing stock with the branch at invoice price. Is it clear to you or not? So in order to find out invoice price of the goods sold, what I need to do, I know that branch will sell the goods at selling price because it is clearly written in the question that branch sells at cost plus 50%. Selling price is 150 as we calculated earlier. So sales which have been incurred by branch must be at selling price. And sales in the question which is given to us is equal to 12 lakhs. Total sales incurred by the branch is 12 lakh. And we know that these sales are at selling price of 150. Suppose if I want to compute the invoice price of these goods, this is your selling price, then selling price is 150, and I want to compute the invoice price. What I need to do, see here, I will move into this particular chart. First of all, I need to understand what I am supposed to do. Actually, I am interested in finding out the invoice price of the sales. That means these two rates are coming into picture. Selling price is 150 and I want to know their invoice price. Is it clear to you? In order to, that means the sales which is given to us are at selling price. And I told you a moment ago, if you want to find out what we call invoice price of the sale price, or if you want to convert sale price into invoice price, you will have to use this particular rate. Is it clear to you or not? Indirectly, it means if I am going to apply or if I am going to subtract 1/5, if I am going to subtract 1/5 of this, 2,40,000, then I will get invoice value of these goods. That means out of 13,20,000 worth of goods which are at invoice price with the branch has sold out 9,60,000 worth of goods at invoice price, but they sold it out at 12 lakhs. Is it clear to you or not? That mean out of 13,20,000 worth of goods which are available at invoice price, branch sold out what we call 9,60,000 worth of goods having invoice value. Is it clear? So now we can say that the closing stock with the branch is 13,20,000 minus 9,60,000. It will be, I think, equal to 3,60,000. So 3,60,000, this will be closing stock at invoice price. This is closing stock at invoice price. Closing stock at invoice price. This will be considered closing stock at invoice price. And now we have been able to find out closing stock at invoice price, and in order to find out its loading, I can write here, and intentionally I am writing it with this pen, this ink, stock reserve, because in the question it was being asked you find out what we call stock reserve on closing stock also. So stock reserve, but I will write in bracket closing. Indirectly it means this is loading on closing stock. And 3,60,000, this is at invoice price, and rate of loading is 1/6. So 60,000 will become the what we call loading on closing stock. And finally, in this particular case, your net profit, now you are in a position to find it out, and which should not be a very tough nut to crack. All you have to do is to simply what we call balance it out, and your net profit most probably will be equal to 3,55,000. So I told you it's a pretty strong question, isn't it or not? So a very interesting question too. So after having done till up to this particular stage, I think this is more than enough for this particular session, and shall meet you on the next one. Obviously, when I'm going to meet you in the next session, we are going to stretch this particular chapter to some further limits. So till then, time to say goodbye.